Hello and welcome. This is part one of a six-part series, Introduction to Cryptocurrency. Part one, what is cryptocurrency? I've had a number of people ask me over time. I've been getting more and more involved in the cryptocurrency space, investing, hodling, holding coins for a long term. I have bought and sold. And as I've been going through this process, people that I know have come to me and ask me questions about it. I'm really interested because they are a little bit intimidated to get involved. So actually recently, a good friend of mine, we were sitting down and talking, and he said it would be great if there was a video series that really outlined the process, going through some of the basic terminology, right into finding how to find the currency, how to find the coins, how to invest, what exchanges are best to use, etc., etc. So that is where the idea of this six-part series was born. Today we are going to be covering part one, which is really geared to help someone who may have heard about Bitcoin, may have heard about cryptocurrency on the news, but is yet to take that first step to start investing. Now, many are intimidated by the stock market, let alone trying to invest in cryptocurrency. I think just the name crypto might scare some people, but we're really going to get into and explore the very basics. So we want to simplify and help someone that is at zero, help them go from zero to being able to do their own research to actually start investing. And we'll cover, get more in depth in the investing part in future parts of the six-part series. My name is Jeff with the HODL Report. Join me as we take this journey into the world of cryptocurrency. My purpose for making this YouTube channel, the HODL Report, has really been out of my passion to discuss, analyze, and really hopefully simplify the disruptive blockchain technology and cryptocurrency investment vehicle, so all can truly understand and more can get involved in this amazing technology. So just one disclaimer before I get started. I'm not a financial advisor. I'm not a programmer. I'm not a banker. I'm not a technical guru. As such, I'm definitely not your financial advisor. And I must advise that when investing in cryptocurrency that you do your own research. Don't take anyone else's word for it. Do what you're comfortable with. And only invest what you are prepared to lose. So with that, let us get started and get into part one of this series. So today what we're going to go through is really more peripheral. We're going to define, go through some terminology, so that way once you get beyond today, you'll have enough comfort to begin to do your own research and have a little bit of understanding. When we get into part two, we're going to dig more into the exchanges and how to actually take your research and put it into play. So some of the things that we're going to cover today, blockchain, defined, mining, cryptocurrency, Bitcoin, altcoin, keys, wallet, exchange, and HODL. So once we go through the terminology, then I'm going to introduce you to two primary websites that I like to use. One is coinmarketcap.com and the other is coinpuffs.com. So starting out, I'm going to read a technical definition of blockchain. This is found on Wikipedia. You can obviously do your own Google search and look up these terms as well, do a little bit more research. So a blockchain is a continuously growing list of records called blocks, which are linked and secured using cryptography. This is really probably the two most important sentences in the paragraph, but each block typically contains a cryptographic hash of the previous block, a timestamp, and transaction data. So this is really what makes the block. You're connecting these different blocks, but makes them extremely secure, but also records them really for time immemorial, where it is time stamped. You have the transaction data. It's all inclusive, and this is really the basis of an amazing ledger technology. So by design, a blockchain is resistant to modification of the data. It is an open, distributed ledger that can record transactions between two parties efficiently and in a verifiable and permanent way. For use as a distributed ledger, a blockchain is typically managed by a peer-to-peer network, collectively adhering to a protocol for inter-node communication and validating new blocks. So I'm sure this is going over your head at this point. Peer-to-peer, and when we get into trying to define mining, but really the way these blocks work, there's a validation of sorts that's going on to achieve and find these blocks as they're solving algorithms. And so the peer-to-peer side of it, and what really allows it to be a decentralized technology, is that you have computers all over the world that are working to solve these equations that are part of the ledger system, that the transactions are taking place. But as you have people participating and setting up these computers, there has to be a way to reward or monetize. And so the way they reward or monetize for those that are mining, and we'll get into that in a bit, is through giving a digital currency, a digital coin, whether it started with Bitcoin and then forward with altcoins. But this peer-to-peer network collectively adhering to a protocol for internode communication and validating new blocks. So once recorded, the data in any given block cannot be altered retroactively without alteration of subsequent blocks, which requires the consensus of the network majority. So basically what it's saying is that once it happens, it's recorded, it's permanent. So blockchains are secure by design and exemplify a distributed computing system with high Byzantine fault tolerance. Decentralized consensus has therefore been achieved with a blockchain. This makes blockchain potentially suitable for the recording of events, medical records, and other record management activities such as identity management, transaction processing, documenting, food traceability, and voting. So these are things that happen from a data perspective that need recording, that need to be secure, that you want to make sure that the person that is involved in this data is the person that data belongs to. Medical record. You want to make sure you can accumulate all the medical records, but that medical record then follows that one individual and doesn't get lost in the shuffle, or that it becomes susceptible to others getting that information. So now let's simplify. So we understand the technical aspect of the blockchain. Let's try to simplify this. So a ledger, which is the data transaction, so meaning a permanent and a secure way to record and track transactions. Think of a large Excel spreadsheet where you have a bunch of data that's being put in, but this is a way to permanently secure it, so it's secure, it's tracking it, it's always going to be available. Managed on a peer-to-peer network, as I had mentioned, you have networks around the world. Each of them are communicating with each other. These can be referred to as mining computers, and the miners that are operating these computers. The ledger is encrypted and transactions completed as computers communicate and mine. They're basically searching to solve equations. So when an equation is solved, the miner, the person who owns the computer that's making the transaction, is compensated with a digital coin, as I mentioned. So the blockchain as a ledger or record keeper is perfect for data management, transaction processing, logistics tracking, and so much more. There's amazing use cases out there of what's happening, whether it's moving currency between banks, between domestic banks, domestic to international, whether it is freight carriers tracking the logistics. It's really an endless technology. So now let's delve into mining. So we get an understanding now of the blockchain. Now let's understand how the blockchain compensates the individuals and where these digital coins came from. So technically, this came from technical definition came from Investopedia. Mining is the process by which transactions are verified and added to the public ledger, known as the blockchain, and also the means through which new coins such as Bitcoin are released. Anyone with access to the internet and suitable hardware can participate in mining. So in the beginning, this was done with the CPU of a simple computer. As more and more people got involved, the complexity or the difficulty of mining increased to the point where then they turned to the GPU or the graphics cards. And if you're reading the news, you saw that some of the primary graphics cards makers like NVIDIA, there was a run on these graphics cards in the past year, and the price skyrocketed. So those that were into gaming weren't so pleased with those that were into mining. So from the GPU, they developed computers specific to mining. So hardware just for mining, which was called ASIC. We won't get into the full definition, but this is the progression, the historical progression of mining to where it went from an individual computer to the graphics card to these ASICs to large farms. Now they have mining farms and big growing companies just dedicated to mining in different parts of the world. So the mining process involves compiling recent transactions into blocks and trying to solve a computationally difficult puzzle. The participant who first solves the puzzle gets to place the next block on the blockchain and claim the reward, which is the digital currency. The rewards which incentivize mining are both the transaction fees associated with the transactions compiled in the block, as well as newly released Bitcoin, Altcoin, or other digital currency. So now we've gone into the technical aspect. Hopefully it didn't go too far over your head, but I think as you listen and you read, you can really get something out of it. But to really simplify mining, it's a way to track and verify the transactions on the ledger, on the blockchain. It's a way to compensate or reward those who operate the computer networks that the ledger transactions are completed on. So now we understand the blockchain, we understand the mining aspect. Now we can get into and understand what we're mining, what was mined, what we're buying, what we're investing in, which are the cryptocurrencies. So technically speaking, again, this is from Investopedia, the technical definition. A cryptocurrency is a digital or virtual currency that uses cryptography for security. A cryptocurrency is difficult to counterfeit because of this security feature. A defining feature of a cryptocurrency, and arguably its most enduring allure, is its organic nature. So it is not issued by a central authority. It's not issued by a bank, which rendering it theoretically immune to government interference or manipulation. No bank, no government at this point is issuing the cryptocurrency or being able to manipulate the exchange and the exchange of the currency. So we can get into in another video. There are some arguments to be made based on the number of miners maybe controlling a specific coin, or the number of individuals that hold a coin, how they might impact the market. But you could have a similar argument for the stock market as we can for the cryptocurrency market, and it's interesting for discussion for sure, but not on today's video. So let's simplify the meaning and definition of a cryptocurrency. Cryptocurrency is a digital currency that operates independently of a central bank. The digital currency is encrypted and can be used as a store of value or for quick, seamless, independent transactions without the need of a bank, without the need of a credit card. So it's easy to move money in this cryptocurrency space from one person to the next. Very, very low transaction cost, and the time of transaction is very, very quick. So let's say you wanted to send money overseas to another country. So normally you have to use an ACH. It has to go through SWIFT. There's normally a high cost involved, and the transaction time will take at the very minimum 3 days and can take as many as 5 days. And if there's an error somewhere, it gets kicked back. And by the time the funds are released back to the individual, it could take a week, 2 weeks when there's errors. So within the crypto space, when money's moved, it's pretty much instantaneous. There's the technologies now that you can see money moving, like with XRP, where a transaction can happen within 3 seconds. It can be 2 minutes. Bitcoin transactions can take up to 45 minutes, but it's not measured in days. It's measured in seconds or minutes. So now we've understood the cryptocurrency. We've gone into mining, the blockchain. Now let's go back to where it all started. So back in 2009, Bitcoin was born. And so Bitcoin, the blockchain, using the blockchain technology, a public ledger, mined coin to compensate those who would participate in the peer-to-peer network of verifying transactions to make the decentralized digital currency work. So Bitcoin, altcoins, so again, the premise, the basis goes back to the blockchain, goes back to the public ledger, and the coin is a way that initially was compensating those that were involved in the peer-to-peer network that verifies the transactions as they occur. So currently Bitcoin has the largest market cap. It's definitely the most popular. It's definitely the most talked about on the news. It's currently number 1 as with the largest market cap. Bitcoin hit a high value back in January of 2018, exceeding $20,000 for 1 Bitcoin. Now it's trading somewhere between 6,000 to 7,000. I think today it was around 6,100. So there is a bit of fluctuation in the market year over year since the foundation, since the initial release of the Bitcoin has gone up year over year. There have been some downs throughout the years, but as you measure them, as we've come from 2009 to 2018, there's definitely been an increase. Even all the other coins that are down now from their highs in the first week of January 2018 are up year over year. So everything, the market is definitely moving in a very nice and positive direction. So we understand the Bitcoin, we understand the blockchain, the mining, the cryptocurrency. So now we're getting into these different coins. So Bitcoin, altcoin is pretty much all the coins other than the Bitcoin. So Bitcoin was the first. Like Bitcoin, the altcoins are based on the blockchain technology as a public ledger. Most are mined to compensate those who participate in the peer-to-peer network of verifying transactions to make the decentralized digital currency work. So an example of an altcoin would be Litecoin, Ethereum, XRP, Stellar. These are just 4 that I've taken out of the top 10. But you'll get to understand and know more of these names as we get into the sites where you can actually find the different currencies and find the different coins. So, all right, now this is as we start getting into the investing side. So some of the terminology that we need to know about investing, holding, hodling our coins. So when we get into holding, if you have a paper currency or fiat currency, you need to put it in a wallet, right? To carry, you can obviously carry it in your pockets, but typically you have a wallet. Men put it in their pockets. Women will carry their wallet in their purse. But with digital currency, you also need to store it in a wallet. So in order to have a wallet, there are different wallets for the different coins. Some wallets can hold multiple coins, but in the end, you really have one wallet per coin. So one wallet for a Bitcoin, one wallet for a Litecoin, but you can have multiple wallets for the same coin. Each wallet is designated with a key, 2 keys to be exact, a private key and a public key. Think of the key as an address. So just like your email address, if you give someone your email address, they want to send you an email. When they type in that email address, it goes through the computer and it's routed to you. So that email that they sent, based on that address they gave, sends you the information, the images, the files, the letter that they wrote to you. That's the way the email works. So the digital currency works in a very similar way, except it has a much longer algorithm, and it's definitely more secure in terms of the length of the code. But you have a public address and you have your private address. Your private address, meaning private, is something that you don't ever give to anybody else because it's private. Your public key or your public address is just like your email, and that is something that you give out to people. So if they have your public key, your public address, they can send you coins. Now, if you gave someone your Bitcoin address and they wanted to send you Litecoin, it's not going to work. So you need to have a wallet with an address designated specifically for the Litecoin. And when we get into investing and storing and holding, and that'll be another video, it'll be a lot clearer. Again, today is really the basic foundations to get you comfortable with some of the terminology. So again, public key, public address is shareable. Private should never be shared with anybody. So a wallet is where you store your digital coins. Each coin must be stored in a wallet that is designated for that specific coin. Again, so meaning if you have Bitcoin, Litecoin, and XRP, you'll have 3 separate wallets, each wallet having 2 addresses, again, a private key and a public key. So now there are different types of wallets. There are software wallets that you download the software onto your computer. There's app wallets that you download onto your mobile phone. And there are wallets that you can download into your Chrome browser. And there are hardware wallets that look like a USB thumb drive that you plug into your computer, type in a code, and that code and that USB thumb drive then unlocks your software wallet and your Chrome-based browser wallets. And that is by far the most secure way of keeping your digital currency safe, is with a combined wallet between your hardware that then unlocks your software-based wallet. So that's something we'll definitely get into in a future video. So now we understand our blockchain technology, we understand the mining aspect, we understand cryptocurrency and differentiating between Bitcoin and altcoins. Now, where do we go to actually buy the currencies? So there's multiple exchanges out there that you could use. On the video, I will get into a handful of exchanges. You can do your own research, explore, read. You'll inevitably find the exchange that you're most comfortable working with. An exchange, again, is essentially the location, the website that you go to buy your altcoins. Similar to if you were to buy a stock today, you would go to a stock broker website, similar to an E-Trade or something like that. So this is exactly the same way. Think of this as your E-Trade of the cryptocurrency world, even though the E-Trades are probably will eventually get into trading cryptocurrency. Robinhood is an amazing app for trading stock. It's an app for the phone, and they are already getting into the cryptocurrency space as an example. So there's many different exchanges available. Now, again, the easiest way to get involved, I guess to back up, there are 2 different types of exchanges. You have your computer web-based exchange, and then you have your app exchange. So an example of a web-based exchange would be Coinbase. You may have already heard of Coinbase because it's been on the news. Binance is another one. Uphold is an app-based exchange. I just started using Uphold last week to try it out. It seems pretty seamless. It's amazing. I connected my checking account. I put my ID for security. Everything was a seamless process. Within 10-15 minutes, I had all my information loaded up, and then it went through and did a verification of my bank account, and I was trading already a day later. I was able to buy some XRP that I trialed on Uphold to see how the process works. It takes about 5-6 days for it to go through clearance, so I'm still waiting. I'm still in that hold time where I'm just waiting for it to clear. Then my plan is to see how I can transact the coin once it's in the Uphold exchange. I want to see if I can move my XRP easily from the Uphold wallet to my own wallet that is secured by my my hardware, by my thumb drive. So that's my plan right now, and that's something that I'll discuss on a future video. There's other exchanges like Gemini and Bitstamp. We'll get into them on the exchange video. So at this point, you're gaining a little bit more familiarity in terms of what an exchange is. So from the exchange, now we understand this whole crypto space. We understand the exchange, the mining, the blockchain. Now, what in the world is HODL? So when I first heard HODL and I saw it written, I said, oh, that's pretty silly. You know, someone obviously misspelled it, and that's exactly what happened. So it came out as somebody was writing something in a presentation, and they wrote HODL instead of hold. And so now there are hodlers and people that are hodling. And so it might sound confusing, but it really isn't. Hodlers are those who are going to hold their cryptocurrency through thick and thin as the coins go up and down through the market. Right now, it's in an accumulation stage, so we're at the lows, and eventually it'll go back up. And if you look through the cycles over the years, there's ups and downs throughout the year. Again, year over year, the majority of the top 10 are up. Just like if you watch the stock market, stocks go through a very similar cycle, but the cycle with the cryptocurrency seems to be significantly shorter than what it is with a typical stock or with a stock market. So another way I like to look at hodling is hold on for dear life, because investing in cryptocurrency, just like you're investing in stock, this is a long-term strategy to capture the long-term market upswing year over year as you build your foundation and your holdings of the different cryptocurrencies. So if you go into the different philosophies of stock investing, you have the traders, you have the day traders, you have the swing traders, and then you have the long-term holders that build their stockpile of that stock over the years, where they had they have the luck of the stock splitting and growing, and then eventually, 10, 15, 20 years later, they have a significant holding of that stock. Similar concept with the cryptocurrency. You can easily be a trader, and you can trade on a daily basis if that's what you choose to do, which has a huge amount of risk, as it would if you were day trading stocks. You definitely have to know what you are doing, but due to the rapid ups and downs in the crypto market right now, obviously you can make big money and you can also lose. Holding over time, you have to take the emotions out of it. You have to say, hey, this is my 2-year plan, my 3-year plan, whatever it is. You're putting it in there, and it's a long term, just as though you were buying stock. And if you bought Microsoft in the early years, and then after we saw the crash of the high tech bubble, and all the stocks plummeted, and some went out of business, and some that were really high, and people were multimillionaires on paper. A day later, they were broke. So you want to remove your emotions from it, and also don't tie yourself. Don't put all of your money into this, the money that you need to survive and live on a daily basis. So that is it in terms of hodling. So HODL, long term. This is a long term strategy. And now, okay, so we understand this market. Hopefully I've clarified some things. I've simplified it. If not, go ahead and put your messages in the comment section. I'll do my best to answer those. And obviously, you can do your own research and get on Google and read yourself as well. So now, where do we go from here? Now we have a little bit of understanding. We're not yet ready to invest, but we want to read more. We want to understand more. So there's a ton of blogs out there. If you just start typing in Bitcoin and blockchain blogs, you'll see a huge assortment of blogs. You have to take them all with a grain of salt, because not all of them are educated in terms of have a financial background or a banking background, or they could be newer to this space, or you don't know, they might be trading just based solely out of emotion. You watch the YouTube videos and a lot of it is emotional. So you want to make sure that you research and do your due diligence, do your research, and find those cryptocurrencies as you would stocks that have a significant, solid foundation of a company behind them. So if you go back to the high-tech boom of the 90s, people were putting money in just because someone had an idea for something that never ever came to fruition. We're seeing a similar landscape with the ICOs that are launching, which are the initial coin offering, similar to an IPO, but not regulated like an IPO. ICOs really are not allowed. As being in the U.S., we can't really participate in the vast majority of the ICOs. But just so, as we see in this space, there's people that are just pouring money into ideas because their ideas, thinking it's going to be the next get-rich thing, like a Bitcoin. But really go and look for the companies that have a solid foundation, and those are the ones that we can see that they're going to be a viable. There's going to be a viable outcome. So now let's get into this. So there are really two different websites. So one of them is coinpuffs.com. The other is coinmarketcap.com. So let's open up the first one. Let's go to. All right, I'm going to go through coinpuffs.com first to show you around a little bit, and then we'll get into CoinMarketCap. They're similar but different. There's actually over 2,600 different coins on the CoinPuffs. CoinPuffs does list a lot more than CoinMarketCap. There are two here, the Zebi and the Matrix. I'm not really familiar with either one of them, but they have them both listed at the top of the CoinPuffs. You can see they've had some huge growths, some big gain, but no volume, so let's not even worry about those. But once we get into CoinMarketCap, we're going to notice that all this is very similar, from Bitcoin, Ethereum, XRP in the top three, as they have been for a while. So what we're looking at here, these are the names of the different coins. Then we have the current price. Then we have the change in the past 24 hours and the total amount of coin that is currently being distributed. So let's go to coinmarketcap.com. I like coinmarketcap.com because it allows you to really drill down and do a lot more research very easily. So let's just open up, as an example, open up Ethereum. We'll click on Ethereum. It's going to go right to an analysis page. It's very similar to what you would expect to find if you're on Yahoo Finance or any website that does a little bit of research on stocks, and you can actually find some information on cryptocurrencies if you go to Yahoo Finance as well. I like Yahoo Finance. It's actually a pretty good website. But if you go to, you get into Ethereum, you click on website, and you can do this on each individual coin. It allows you to really drill down and get more information on each of the coins. So here we go, ethereum.org. This is it allows you to really get into and understand the technology a little bit for Ethereum. So that's it for the CoinMarketCap and the coinpuffs.com. Coinpuffs.com. This is where I'll leave you with your research. So that's it. Really, I think I've probably spoken way too much. I'm way almost at the 40-minute mark. But so next steps. Now you're definitely armed. You have a little bit more information after watching this video. You should have a little bit of a comfort level now to go onto those two websites and start doing your own research. Don't invest yet. If you want to look at some of the exchanges, you can. Our next video, we're going to dig into the exchanges. So again, this was part one. We'll go into part two, discussing the exchanges. And then after that, you'll be even a little bit more comfortable with the space. So I really want to thank you for joining me today on my premier HODL report. as part 1 of this 6-part series. I have a lot of other great videos planned outside of the series, and I hope that you'll join me for those as well. So if you enjoyed today's video and you want to make sure that you're up to date on part 2, 3, 4, 5, and 6, go ahead and click the subscribe button. Next to the subscribe button is a little notification bell. If you hit the notification bell, it'll give you a nudge and let you know that I've uploaded a new video. And also, if you did like, please give a thumbs up. And I'll see you on part 2 of this series in my next video.